Good morning, traders. It is Wednesday, July 30th, 2014, 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions and market data are subject to change without notice. Past performance is not indicative of future results. Start out with the overnight news. The US and EU agree on new sanctions on Russia. EU is imposing economic sanctions, including defense, dual-use goods, energy sector, and technology. Also restricts Russian state-owned banks access to capital markets, which is really the choking part for that economy. There's still no ceasefire in Israel. Bayer, who's represented in the DAX as well as the Euro stocks, Q2 in line to a small miss. BBVA, which is on the IBEX and Euro stocks, Q2 net small beat, came in at 704 million versus 697 million consensus revenue. Twitter, EPS, revenues, and monthly users all beat. US GDP came out this morning, annualized second quarter GDP 4.0 versus 3.0, big beat there. US ADP employment, remember, this Friday's Unemployment Friday. U.S. ADP employment month on month came in at 218 versus 230 expected, so a little bit worse. Germany's CPI year on year came in at 0.8% in line. So you can see all that represented in the price action overnight. As far as what's on deck for today, remaining for today, we have crude oil inventories at 9:30. Expecting negative 1 million barrels. Distillate inventories expecting plus 1.5 million. Gasoline inventories plus 1 million. And then we have the key FOMC rate decision and statement at 1 o'clock Central, 2 Eastern. For the Fed, I have notes on that. FOMC expected to taper their QE program by another $10 billion today, with U.S. GDP also due, which also already came out. In terms of earnings, focus will be on MetLife, Phillips 66, Southern Co, and Sprint. So that's what's on deck for today. As far as economics, need the market's likely to slow down to a grind before the FOMC number or release comes out. As far as supply events, auctions, I see a 10-15 two-year FRN auction for 15 billion, and 12 o'clock Central, 7-year note auction for 29 billion. Let's look at our chart. Now remember, I'm working remotely. So the screen resolution may not be as great. It may actually be smaller. So let's look at what we've done yesterday. Interesting rally here on Monday. I was not here on Monday, so I missed all this. Not sure what drove it, but interesting push back up to our key 1975 area. Ended up closing at 72.75, but also building the point of control at 72.75. And then yesterday opened just out of range. Looks like an open auction out of range, and then rolled over to test the point of control. Missed it by 2 ticks, only to find buyers back up to 78.50. Pull back to the open, and then a high of 79.50, and then it sold off. Again, I was on the road yesterday. I did not catch up with what's causing this move here, but 10.25 points is about a 4th standard deviation move in the ES. So this looks like an impulsive move. With an impulsive move, the expectation is for it to pull back to less than 50% of the move, and for a lower low to be put in, which is what happened here. And then you have the corrective move back up into the opening swing. Looks like the opening swing held here. Yep, 75.50, and then the market fell back off below the IB. We've created what looks like a key LVN up here at the close of Monday at 72.75, and we're trading 71.25. We were trading around 72.25 on the GDP release. So this area here is going to be important on the open. 72.75 looks like a rejected area for me today. The overnight, session flat on the Asian session, basically. Looks like a 3-point range on the Asian session, and then some movement on the European session. Remember, Bayer and BBVA announced, and we have the German GDP and stuff. And then this spike here is on the US GDP coming in at 4% versus 3%. That's big news. And so now we have an overnight LVN at 69.75 is yesterday's point of control. The point of control for the overnight session is still down below at 66.25. Looks like overnight inventory is long. So the expectation is for this to look for sellers, to test for sellers initially back lower towards 69.75, and potentially down all the way down to 66.25. We'll see how that works in the morning, but again, I'm just simply catching up at this moment. So things to keep an eye on: how it treats 72.75 on the open, how it treats 70.25. We have a double distribution overnight. Looks like the market's is accepting a higher price currently, and then this is an impulsive move that has not had a completion yet. So to me, 73.75 is much more vulnerable than 63.25 on that overnight stat of 96%. 97% probability of taking out the overnight high or low. Looks like the overnight high is much more vulnerable. Overall, market remains in balance in the upper range here. I know this chart seems noisy with all these lines. There's just a lot going on in this area, but we've basically broken up on the 1st of July, right at the beginning of the month, and to push 78.25, and then we finally take out the 78.25 and push to 85.75, and we're in a pullback phase. Yesterday, we closed the gap zone left behind on the 24th. So the gap zone here, gap zone low at 79.50, yesterday's high at 79.50 on the dot. So it tested the entire gap zone before that sell-off, that hard 10.25 point sell-off that we saw. And then the other thing to note is 71.25 is the most traded price in this zone. This used to be a three-pronged composite, and now it's turning into a pretty normally distributed volume profile with a peak up here at 82, but we need to pay attention to 71.25. So what that tells me is this area here, 72.75, 71.25, and 70, pretty noisy area, well accepted area. This could result in an open auction on the open and a lot of noise before the market starts to test lower. So the main idea for today is to look for an open auction at the open, and then the market to advertise prices lower to find buyers, and then as soon as it does, I expect it to take out 73.75, target 75 above again, 75.76, and then from there it could just chop around and settle in the middle. There's a wide range here. Yesterday we did 17.5 points, and we have new highs right up at 85.75. 85.75 with a naked POC at 82.25. Okay, naked gap at 80.50, naked POC at 82.25. That would be the target above. I want to show you the monthly profile. Look at this profile. We're trading right in here, 71.25-ish. Very evenly distributed profile. Look at the prior month of June. Very stretched profile. The market seems to be okay with these prices. It's accepting value as 59 to 75 approximately on the TPO profile, and it's resting. It seems to be it still has the energy to climb here. So what this is doing is it's building energy and volume to continue its climb up. It is a higher high, higher low, higher value, higher point of control. Okay. The other thing I wanted to show you. Oh, when you change monitor resolutions, things get wacky. What I wanted to show you also is push to 85.75, and the struggle here is seeing more and more selling down. Just a very, very odd behavior here. As we sit in the same price, it seems selling on the bid occurs a lot more often than buying on the offer. So again, the theme of a market that's climbing on price but falling on delta continues forward. Again, this does not mean you should go out and sell the market, that it's topped out or anything, but it is something to note that it's doing so on less and less strength. In other words, it's getting less and less participation at higher prices, which is an indication that the market sees the higher prices as less favorable, which is generally a precursor to a correction. Here's the volume, the profile chart. As we follow the point of control from the time we broke higher, you could see that that we're imbalanced. The point of control, this red line here, keeps moving all over the place, just hopping around. Nice run up here, nice island made up here, but then the gap down last week, and then on Monday for it to seek lower, but Monday it pushed prices lower and completely rejected them, returning to the open and to the point of control. To me, that shows buyers active down below 65 and away from the point of control. That's what it looks like, and so. Yesterday, it opened above, tested again, and held, so it canceled what Monday did. But here we are, again, trading against the point of control. This is how balance works. You have trading from both sides. It's not really respecting any particular level. It's not really respecting. It's sitting right, it cuts right through the point of control as opposed to testing it from above, breaking, testing it from below. So the point of control area here down to 65.25 all the way up to 79.75 is a very good zone given current market conditions. So you have your first hypothesis here, the key hypothesis. Again, the expectations for an open auction in range. I expect a turbulent trade here between 70 and 72.25 up to 72.75. Expect noise here, but I expect the high to be taken out and for it to continue to 75 and potentially to push in towards yesterday's high. At a minimum, I'd expect the test of 75 today. It is the value high of yesterday, as well as a key level from the beginning of the month that we have tested and retested and kind of trotted through. But this is the area that is likely to battle out today, and I expect it to break higher rather than lower. I do not see this as a continuation of yesterday's selling. I'm not expecting it to be. Now remember, we have FOMC at 1 o'clock, so the market's likely to make its move early and then settle down in a range before the release comes in, and then the release will bring in probably a lot of volatility and position adjustment and so on. So be patient today. Don't try to force positions. There's not likely to be all that great a market. Additional headline risk. The additional headline risk is nothing new. Russian sanctions likely to really affect the economy over there, which in turn will affect how Europe trades with Russia. So I'm not sure what the play is there, but it certainly does bring an uncertainty into the market. If there's any positive news from that situation, we'll likely see a pop into new highs. Remember, the targets above, multiple targets above, 87.75 initially, then 2000.5, 2001 and a quarter, 2005, our initial targets above. This pullback here, this rotation right here, if the market continues higher, and breaks this 85.75, then we'll bring in this measured move. This will be a new measured move right here. 49.85.75 down to 60.75 will be another measured move